I think David is right if you assume the status quo, meaning what are the risks? But what they're saying is we're going to question this. We're actually going to go here and just totally rewrite that. If that happens as part of this, all bets are off, in my opinion. I don't think any of us know with any certainty what a new economic framework would look like. And if Scott is basically prepping himself to say, hey, put me in, coach, I'm ready, I would take that seriously.
Hey guys, welcome to Everyday Finance. In a much-awaited interview, billionaire investor and CEO of Social Capital, Chamath Palihapitiya, provided a thorough assessment of the financial market's current situation and explained why he thinks former President Donald Trump may have just triggered a significant turning point. Chamath contends that a volatile market environment is putting investor confidence to the test due to a confluence of geopolitical tension, growing tariffs, and intensifying recession fears. He maintains his optimism in spite of this volatility, speculating that a big market rally is imminent. Chamath believes that we are currently on the verge of one of those turning points, citing historical trends and economic indicators that frequently precede significant market recoveries. He asserts that political changes and policy expectations linked to Trump's impact on the economic narrative may contribute to the potential size of this upcoming rally. Chamath, a longtime supporter of cryptocurrencies, also offered his thoughts on the place of Bitcoin in the present market environment. Given that Bitcoin is currently trading just below $84,000, he believes there is a good chance it will rise soon, particularly if other markets start to recover. According to him, Bitcoin is a risk-on asset, which means that as investor sentiment and economic momentum improve, so does its price. According to him, Bitcoin may benefit most as doubt fades and clarity prevails. Yet, Chamath warns that things may not improve soon. Bitcoin may experience more volatility until important economic data and world events are resolved due to market uncertainty. He believes these declines may offer opportunities for long-term investors who understand macro trends. Chamath discusses his indicators, his outlook for a recovery, and how political and economic events are affecting traditional and digital markets in his latest appearance. He believes the market is preparing for a shock, but the recovery could change the investment environment. Take a listen to him.
A friend of ours runs a 100+ year company. I'm just going to say it in generic terms so that I don't betray his confidence.
Sure,
but
no problem.
And this is a business that's been built over 100 years, owned by an American family, an incredible family, and they make products that we all know and love. And what did this action do? So in their example, they're in a very difficult position because they have, as David said, a very tight operating margin because they have to compete ferociously against China. And they've done everything possible to maintain their capabilities in America, hire American workers in the heartland, but still compete against China. It's tough. And this action today swings them from profitability to a potential yearly loss in a meaningful order of magnitude, like hundreds of millions of dollars. So, Jason, that's the other side of this tariff coin. So we have to find a way of finding those examples, and as Ben said, excluding them somehow or giving them reprieve, because that wasn't the intention, I think, of what Trump was trying to do yesterday. That's an example of a company that should be winning and should continue to win and fight the good fight against China and try to continue to employ thousands of Americans. But this thing, because they had some capacity in some other countries, not China, by the way.
Got it.
Blows the thing up. And so now you have to fix those things. I mean, what is that? Just a kind of like refresher. What are we talking about? We're talking about commercial relations between, at the time, 44 countries, right? This is a big statement. I don't think that these kinds of things are said casually at a Manhattan Institute cocktail hour. And I think that people understand, if you're kind of like steeped in the history of it, how important these kinds of statements are. So I think I take this similarly to how I take Trump's rhetoric on tariffs. And I'm spending some time trying to now understand how are the scenarios that could play out? Because I think David is right if you assume the status quo, meaning what are the risks? But what they're saying is we're going to question this. We're actually going to go here and just totally rewrite that. If that happens as part of this, all bets are off, in my opinion. I don't think any of us know with any certainty what a new economic framework would look like. And if Scott is basically prepping himself to say, hey, put me in, coach, I'm ready, I would take that seriously. Okay, so let's play conspiracy theorist for a second, because, okay, you're right, Ben. Like, you want that clarity. I want that clarity. Freeberg wants it. JCal, everybody wants it. But if this moment, if it's a catalyst, to your point, where everybody is forced into the room and Trump leads a grand bargain across the 50 or 60 most important trading partners in the world, what does that look like? Like, it's almost like, okay, we're reestablishing something that's akin to the United Nations and what the United Nations was meant to be post-World War II. But that institution has totally failed. So this new thing exists purely on economic lines and cooperation. I don't know. I struggle, actually, to your point, to kind of imagine what are the outcomes. But there's so many unbelievable outcomes in that scenario if they were able to get the top 50 commercial mercantile countries together in a room and say, let's hammer something up.
As important market and economic forces start to come into alignment, Chamath has been warning investors to pay close attention for months. He has repeatedly cautioned that the foundation is being set for a big change, and he now thinks we are entering a time when asset prices, especially those in riskier sectors like tech and cryptocurrency, may rise sharply and parabolically. He's quick to point out, though, that there will be turbulence along this upward trajectory. It looks like a significant market disruption is imminent. What could have been a more seamless rally is being overshadowed by growing investor apprehension over tariffs and tensions in global trade. Even as the circumstances for a breakout start to come together, this uncertainty is making investors more wary. Chamath maintains his composure while remaining hopeful regarding Bitcoin. He admits that, despite a general climate that seems to support eventual long-term growth, Bitcoin may still see cyclical price swings in the short to medium term. In other words, even though there may be fluctuations or even drops along the way, the macro trend is still upward. All things considered, Chamath's point is crystal clear. The market is about to undergo a sea change. He thinks the groundwork is in place for a powerful comeback, despite growing concerns and temporary hesitancy, and that people who can see past the current chaos will gain the most. Watch more clips.
There's an analog to this that I think is important. Like, when you look at the debt to GDP of Japan, one of the critical questions is how can you have a functioning economy at 250, 260% debt to GDP, right? And we're at sort of like 100 and teens, right? 120 something, whatever. And one of the critical advantages that they have is that they export a lot of incredible goods abroad, but they have an incredibly deep domestic pool of buyers for their own Japanese bonds. And so there's this permanent bid that exists because the net buyer can be a Japanese person on the margins. And they're always there. And it's not necessarily a person, it's an insurance company, it's a pension fund, etc. The thing that US dollar stablecoins does is it starts to replicate one of those advantages, which again, if you think about having a release valve for the US economy, and if we needed to all of a sudden scream to 200% debt to GDP, the real question is, where's the incremental net buyer of the US bond? And it could be the person that has to back the stablecoin, which would then say the people in charge of the crypto strategy, we won't name names.
No, if anybody knows anybody.
That legislation needs to be incredibly permissive because, to your guys' point, we would want the bid to US treasuries to exist and to be as ferocious as possible. NERC put out a study, just like, this is very tactical, but it's part and parcel of what you and Jason are talking about. Do you guys know that about 25% of all of our utility workers in America became eligible for retirement between 2017 and 2022?
I did not know.
So most of the people 56% of all utility workers now have less than a decade of experience. You know what that's resulted in? In 2021, the average US customer of an electric utility experienced 7.5 hours of service interruptions, and it's just growing.
I think the average plumber's age is like 50-something. We can't get people to become plumbers.
NERC says that 19 states now in the United States can face rolling blackouts during normal peak conditions if these issues aren't addressed. And by the way, that's a human capital problem. But if you multiply that by 10 and 20 and 30 times, there was a different tweet. I don't know, Nick, if you could find it, that talked about an organization trying to find people to help build nuclear submarines. Did you guys see this quote? Where they needed 100,000 people to build nuclear subs in the United States, and they could barely find like a few hundred. I actually think it's fun because we're going to kick off a different poly market around this because I think it's interesting. So the thing that we haven't talked about is with all of the tariffs, with all of the financing questions, with all of the recession questions, short-term rates, long-term rates, the one thing that we haven't sufficiently talked about, it's not really in the press, but it needs to be talked about, is there is a tremendous amount of corporate debt that supports these businesses today. And you would say, well, if long-term rates go down, there's no real risk. But the tariff picture actually impacts revenues, right? And the problem with that is that there's a lot of companies that have debt covenants tied to revenue and EBITDA. And so this is what I spoke about at the beginning of January, which is the one risk that is uncontrollable is what happens to corporate debt. And could we see a wave of defaults and a wave of action? Nick, you may want to just play the clip and we can talk about what we can do about this. This was my pick for the best investment idea. So this thing, for every $1 billion of risk you would have put on, every $1 billion that you put on would have cost you about $1 million. And that $1 million would have made you about $7 million in about 3 months. Why is this important? The CDS actually represents the structural risk in the United States private economy, in the corporate economy. And so, Nick, if you just put it back on. So when you see these spreads blowing out, this is actually a very important warning sign. And this is actually a thing that I think Scott understands well, Howard understands well. I think they'll translate this to the president. If I have an opportunity to explain it, I will. But this is a really important market to pay attention to. This is what was the canary in the coal mine for the great financial crisis. This was the stuff that showed us that there was a big default event happening in the mortgage side of the market, but then that spilled over to the broader economy. And so the tariff picture and the recession picture will get played out in this chart. And I think it's something that folks can and should probably pay tremendous attention to, because I think now that this trade is in the money, the question is, I don't think we want this to happen, that 1 sigma, 2 sigma event where all of a sudden this trade returns 1,000x is really bad.
Regarding what he perceives to be an impending explosion in the cryptocurrency markets, especially with regard to Bitcoin, Chamath is raising the alarm and the opportunity. He contends that because of its current low price, Bitcoin is appealing to both long-term investors and short-term speculators, particularly as we get closer to a time when price volatility is anticipated, such as the movements that are usually observed in September. According to him, this undervaluation is an indication of a significant opportunity developing beneath the surface, not just a brief decline. The upcoming wave of widespread adoption is what drives Chamath's optimistic outlook. According to him, a new financial era is about to dawn, one in which increased participation in the Bitcoin and cryptocurrency markets may push prices into the six-figure range. He highlights a recurrent historical trend, Bitcoin's capacity to spike tenfold during significant turning points, and thinks we might be on the verge of another one of those seismic events. However, Chamath's prediction is firmly grounded in his criticism of the current economic structure and is not just dependent on market conditions. He is a harsh critic of central banks, particularly the Federal Reserve, accusing them of making false claims while dumping money into the economy, creating bubbles, and encouraging risky investment. He says there won't be a smooth return to the previous economic order because the recent spike in inflation has revealed the system's deep cracks. Instead, he depicts an out-of-control economy and a dangerously high U.S. debt. He cites economist Max Kaiser's pessimistic assessment that the only outcomes are deflationary depression or hyperinflation, which would severely lower living standards. In this turmoil, Chamath highlights a new development that could change the financial scene: political leaders' growing willingness to take Bitcoin seriously as part of a structural fix. According to him, this is the first step toward a Bitcoin-based framework that could help avoid a collapsed monetary system. To summarize, Chamath sees Bitcoin as a response to a global economic system on the brink of collapse, one that could change our understanding and behavior of money in the future. Thanks for watching.